All right, welcome everyone. Investors who are old or new, and especially if you're new to investing, I'm very happy for you because investing in the stock market is amazing. You should be careful, obviously, but it is amazing. In this video, I'm going to talk about a company that I believe will benefit going forward. The last time I talked about this company, that I made a video about this company, was back in 2020, and it was a brief video actually, and it had more to do about Owl Rock, but not so much about Owl Rock Capital Corporation. All right, so it was more about ticker symbol OWL, but not about ORCC, which is what we're going to.
Are you looking for a Discord platform that offers a first-class trading community? That's what you can expect when you join Bull Market Watch. Trading can be challenging for some people, but we're here to simplify the process for you. We have a very powerful track record. Our Discord deals with day trades, swing trades, and long-term trades. Hundreds of traders operate through our Discord, where we come up with stocks to trade for profits on the NASDAQ and NYSE. With a low monthly subscription of $9.90, you will have full access to our Discord, where you can interact with other traders and get all the latest news when it comes to trading as well. It's a community that is extremely supportive of one another and always willing to help each other out. Become a member of Bull Market Watch today and be on your way to a better financial situation.
Talk about in this video. All right, so you're looking at Owl Rock Capital Corporation. This is the past 1 year, and it is trading right now at $13.24 as I'm doing the video. I really like this company. It's pretty cool. It's pretty amazing. So much. They have a lot of assets under management, and I believe that this company can benefit, and the shareholders will benefit also. Obviously, as the interest rates remain high, it's actually a benefit for this company, and they'll be able to make more money. In fact, if you look at the past 1 year, there's been so many Fed rate hikes within the past 1 year, right? So many. I've lost count how many there were. And constant talks about recessions and this and this and that. The NASDAQ, S&P 500 are lower now than they were last year. But this company is overall 1.65% higher. All right, so it's up for the past 1 year. A little bit, I get it, but hey, you know what? The point is to not lose money. So this fund makes investments in senior secured or unsecured loans. Have you ever heard of that? You've heard many companies, I'm sure, on the stock market saying that they raised money through unsecured loans, subordinated loans, and also considers equity-related securities, including warrants and preferred stocks, and pursues preferred equity investments and common equity investments. The company seeks to invest in middle market companies based in the United States with a beta between 10 million and 250 million annually. If we look at the dividend yield, it is a 10.10%, which is actually pretty good. The annual dividend is $1.32. Think about that. Institutional ownership in the company is at 43.25%. Shares outstanding 389 million. The PE ratio going forward is 7.11. And when we're talking about PE ratio going forward, that shows pretty much what the markets think the company will grow or not. It's not bad. 7.11 is not bad. The industry average I get is 13.21, but that doesn't actually mean exactly that, okay, that's how it's going to be. Now, if we look at Wednesday, May 10, 2023, when they had their earnings, Owl Rock Capital Q1 EPS of 45 cents beats the 43-cent estimate. The sales of $377 million beat the $365 million estimate. They pretty much beat everything all across the board. RBC Capital also gave an upgrade and a price target of $15 for the company. So Owl Rock Capital stock gains after Q1 net investment income reaches a record new high. And what do we mean by that? Well, their Q1 net investment income of $177.9 million or 45 cents per share exceeded the 43-cent consensus, rose from the 162 million or 41 cents per share in Q4 2022 and from the 122 million back in Q1 of 2022. This company is doing amazing. The company said that we achieved record net investment income in the first quarter of 2023, building upon our consistent track record as we continue to realize earnings momentum from rising interest rates. So borrowing money is more expensive now, right? The CEO also goes on to say that credit performance remains strong and our direct lending portfolio is defensively positioned to generate healthy, stable returns throughout the current economic cycle. So perfect. Everything that everything that the CEO just said is amazing. And I like the fact that this company can gain and provide a better return for the investors also with the rising interest rates. If we look at the total revenue of the company as of December 31 by each year, in 2019 was 456 million, 2020 302 million, obviously because of the pandemic, 2021 with the surge of the opening and the economy trying to catch up from what it missed in 2020, it went all the way up to nearly $690 million, which was an insane gain. Things started to level off, but just to more normal ways in 2022, but still showing that the economy is now even better, as it technically should get better each year. And the growth of the company, if it's a good company, should be that way. And so even though 2022 was 535 million, don't look at that as a negative, thinking, well, why in 2021 it was 689 million. Like I said, there was a big surge of business and catching up, let's say, from the closure of the pandemic. So I actually find the 2022 revenue very positive and amazing. If we look at the total liabilities, it's at $7.7 billion. And if we look at the portfolio highlights, diversification all across the board in a very healthy way. It's not a majority in one industry sector. It's actually balanced very well. All right, so overall, Our Rock Capital, ticker symbol ORCC, it appears to be a compelling opportunity for income investors with a generous 10.8% dividend yield, solid dividend coverage, and also the fact that that an initial investment, let's say not yours, but I shouldn't say that, you have to decide for yourself, but an initial investment in this company, in my opinion, will still rise. So the initial investment goes up, you get a dividend, the company grows, and it should stand to benefit more. And with the environment that we're going forward, which is kind of unknown, you can read a lot, but you'll never get to any certain conclusion. Look at Carl Icahn. He thought that in 2018 that he could, 2018 or 2019, I forget, that he could outsmart the market by betting against it and so on certain things. But I was just reading it earlier today, real quick. He lost $9 billion. So the economic environment is uncertain. It's strange. But what we do know is that this company does gain, and it benefits. Actually, there's a benefit with the interest rates being where they are. So it's fine, in my opinion. I like this. Also, our Rock Capital debt investments have proven to be very resilient, and the company has a strong balance sheet to weather potential headwinds. Now, with potential catalysts from the pullback in regional banks and higher interest rates, our Rock Capital could be set to reward investors in the future. So with all that being said, I like this company. Obviously, you need to do more due diligence. This video is not a really full, complete, detailed analysis, and it shouldn't be, because that's something that you would have to do on your own. Thank you very much for watching this video. I wish you all the best and take care.